It's Brian Preston, the money guy.
Now, Brian, let's shift a little bit. Let's talk about the next decade. Let's talk about the 30s, which we always talk about is the messy middle. And man, is this the messy middle. This is a decade where a lot of stuff happens. A lot of folks buy their very first home at the age of 33. They get married. They start having a family. There's all of these different things coming on that make the 30s a pretty difficult decade.
Yeah, I think, we give a lot of grace and latitude for the 20-somethings because I know it's hard to say you need to be saving and investing 25% of your gross income. But now that you're getting into your 30s, hopefully you've been tracking your net worth. Hopefully you have built the habit of saving and investing for the future. This is the time where it starts to matter. But as you shared, Bo, it's hard because life is pulling on you in all these different directions.
Yeah, we've shown this chart before, but it's really interesting. When you map out your life, as you age, your commitments change. As you move from your 20s into your 30s, and then from 30 to 40, the things pulling you in different directions expand. You have family, you have house, you have kids, you have community, you have all of these different things. And in that same vein, those things that generally pull you in different directions also draw on your income. So the amount of disposable income that you have actually decreases in this decade. So being a diligent saver becomes really, really difficult because there are so many things pulling in your back pocket.
Well, I think it's important for all of my podcast listeners because they don't get to see the visuals that we're putting up right now. It's not uncommon in your 20s where your disposable income and your commitments kind of walk up the hill together, where they don't feel disconnected. They actually feel very correlated. And it probably doesn't feel overwhelming at that point. But unfortunately, in your 30s, because you see these big life events, like you start a family, you get let's put it in the right, you get a significant other, you start a family, and then you buy a house. All these things happen in your 30s that there's a huge disconnect between those commitments and the disposable income. And you don't actually see relief on this until you get close to your 50s. So that's why when we describe the messy middle, it is your 30s and 40s where you're trying to just make sure just keep swimming. It does get better.
And it's not just the disposable income. You can look at the exact same chart, but instead of thinking about disposable income, you have disposable time. You also don't have as much time in your 30s to be able to focus on the things that you need to be focusing on. So it's so important. If you've not established those good habits in your 20s, you have to start establishing them in your 30s because you're not going to have a ton of time to focus on them if you can't get them set up on autopilot and make sure that you have your money moving in the direction that it ought to be moving on an automated basis.
Yeah, I don't want you to get overwhelmed and just quit because like I said, that's why we entitled it The Messy Middle. We want you to know there's comfort in numbers and the fact that everybody else feels like this. Just like in your 20s, you can put up with anything because you come from humble beginnings. In your 30s, you can dribble and juggle all the life commitments because everybody else is also struggling with this. This is the period where the days are long, but I promise you, the years will be short. So hang in there and just keep swimming.
So what are some big things that you can focus on? Well, the first one is in your 30s, don't try to keep up with the Joneses. You've now probably had some success. You've probably started to increase your income. And it's easy to think about that nice car, that nice house, or that nice fill in the blank. Make sure you understand why you're making the decisions you're making. And it's not just because the person next door or the person down the street made that decision and you want to look wealthy by mirroring the decisions that they're making.
I also think in your 30s, this is the time to focus on the things of knowing what you don't know. And when I say that, knowing what you don't know, that's really the risk that are sitting out there in your life. If you have children, make sure you have estate documents so you know where what happens to your kids if something happens to you. Have the life insurance, have the emergency reserves to make sure, because there's a lot of uncertainty out there. You need to plan accordingly. All these things are must-dos while you're in your 30s.
And then the third thing that I would encourage you to focus on in your 30s is, are your decisions becoming purposeful? We've already mentioned that this is a huge transitionary time in most of our lives. Well, here are some of the ways that we want your thought process to begin changing as you approach decisions. Instead of making the decision, oh, I should be saving for the future, you make the decision, hey, I'm saving 25% because you have clearly defined what it is you're saving for and why it is seriously important to you.
Yeah, and by the way, when we say saving, we also mean we correlate that and actually use it as a synonym of investing.
That's right.
So that money is being put to work. But I love the thought of it's not aspirational. In your 30s, you are putting that money to work. You are prioritizing saving and investing 25% because it's got a purpose.
And here's a great example of that. If you're someone who's 30 and you start saving 25%, and your goal is that when you retire, you want to replace 80% of your pre-retirement income, starting at age 30 will give you a financial independence date around age 59. If you wait until 35, you're still on track for a normal retirement age 64. And if you wait till the end of your 30s, you can see that number drops all the way out to age 68. You need to start saving in your 30s because if you don't start in your 30s, it gets much, much, much more difficult when you get into your 40s and your 50s.
Yeah, it's definitely a period of being purposeful. And that is not only on how you invest your money. I want you to think about what you go to 9 to 5 every day. If you think about in your 20s, you might have a job. But in your 30s, I'm hoping you have a career where you will completely transition from a short-term mindset to very purposeful. How am I building ownership at this place I'm working at every day?
And then when it comes to consumption decisions, you move from this idea of, oh, I want to buy fill in the blank, to recognizing in your 30s, you can answer the question, hey, I don't need to buy this because I'm moving towards something that is bigger, better, and greater in the future. It is a maturing of the way that you approach financial consumption decisions.
Well, yeah. I mean, I think when you're younger, there's a lot of wants in your life, and you as you get older and you get more mature with money, you can easily differentiate between the wants and the needs that should be very purposeful for the long term.
So let's talk about where your peers are. If we look at the median income for someone in their 30s in this country right now, it's about $52,700. The median net worth is just a hair under $44,000. So you're probably asking the question, if I'm in my 30s, where should I be based on my income? Well, do this calculation. Take your age, multiply it times your income, and then divide by 10 plus the number of years until you're 40. So if you're 30 years old, it would be 10 plus 10, so you would divide by 20, and that will tell you where your net worth should be if you want to be an average accumulator of wealth. But maybe in your 30s, you don't want to know if you're average. You want to know where you really stack up against your peers. We have those numbers.
So let's look at the stratification of this. We already shared the median was right under 44,000 for most people in their 30s. But check this out. If you want to be in the top 25% of people in their 30s, you need to have $166,000 on your net worth statement. If you want to be in the top 10%, it's $408,000 is how much your assets need to exceed your liabilities to create that net worth.
Now, this is really, really cool. A great thing about your 30s is you've likely been working for a while. You've been tracking your net worth statement for a while. We have another little spot check that's really, really interesting that you can do. This is actually something we make available inside of our Know Your Number course, where we walk you through how efficient have you been with your income. And we teach you how to go out to the Social Security website, pull your historic earnings all the way back to when you first started earning money, and you compare your lifetime earnings with where your net worth is to give you an efficiency score to see how well you're turning your income into dollars. By the time you're in your 30s, you should be able to do this exercise, and it's probably going to be mind-blowing when you see how hard your army of dollar bills can begin working for you.
Yeah, I love the 30s because there's such an opportunity where you have had time to build wisdom, but you also still are so young that just really the sky's the limit on all the different things you can do. Don't miss out on that for those very special 10 years.